I think your early days of your career, you're really not sure
Yes.
about what you want, about anything.
Mm-hmm.
So it's a great time to explore different areas rather
Mm-hmm.
than figure out a specialization right there. Okay.
Mm-hmm.
So if you're unhappy with the job, fine, move on. Doesn't matter in the long run. Okay. When you're young,
Mm-hmm.
the problem is whatever is happening to you at that moment seems to you to be a big problem. But in the long run, that's not the case. Okay. So if you have worked at 5 different functions or 5 different jobs in the initial years of your career, it's absolutely fine. What matters
Mm-hmm.
is what you learn at the end of, let's say, 5 or 10 years, and that's the point where you will have a perspective, and
Mm-hmm.
you would be able to then figure out, okay, this is what I want to do for the rest of my life. For all you know, after
Mm-hmm.
working for 10 years, you may realize I just want to leave everything and go somewhere else and start
Mm-hmm.
a shop, maybe. Fine, that's okay. But building perspective when you're young is key.
Yeah, hi, Sandeep sir. Thank you so much for willing to do this podcast, this conversation with me. I have been following you on Twitter. I have been reading your content, and yeah, once I saw your video on money control, and I was so fascinated that an idea that says from a professor to a professional trader. So I was like, what? I was like, oh, this is really interesting. And I think you have read the book, the Rich Dad and the Poor Dad, right?
Yes,
So
yes.
in that book, the author portrayed two dad. One is
Hmm,
professor, one is street smart. So
hmm,
I was kind of, oh, this guy, he's a professor. He knows
okay.
ideas, but at the same time, he must be a street smart. That's the
Okay.
reason your story kind of fascinated me, and then I reached out to you, and you said,
Okay.
yes, why don't we do this podcast? So thank you so much. And so I just want to give a quick intro about you to my viewers. So
Sure.
Sandeep Rao, he is the head of investment and research and content at Investmint, which is, I think, a stock market investing platform, right?
Yeah, that's
And
correct. That's
yes,
correct.
and he also worked as fund manager. I think he worked as fund manager for Capital Mind.
That's correct. Yes.
And you are also an equity investor, derivative trainer, teacher,
Yeah.
like a
Yeah.
professor, and you have been a co-founder for some good number of companies.
Yeah, a few companies
And
which.
you
Yeah.
also worked as consultant at Infosys Technologies.
Correct. Correct.
You like pretty much have a good background, like a long journey into this technology and investing, right? So first of all, again, thank you so much for doing this conversation with me. Why don't we start with your journey? How your journey starts as a teacher, at the same time a professor who is teaching maybe some bright young students. Now you have many companies in your hand. You have been co-founder for some few number of companies, and now you are full-time into research, into trading. How do your journey started? Maybe we can start from your college journey, where you attend, and how you become a professor, and now into this trading.
Sure. Thank you, Akuza, for the opportunity. It's nice speaking with you. So let's get to the question. How did it all start? So I came from a very a middle class family. My father was an engineer, and I wasn't really good with anything to do with engineering. So I decided to study commerce, and that was kind of a default thing more than out of choice, but just studied that. And then the next best was to do an MBA. So I immediately, right after my graduation, did a post graduation in business. And so that's where my corporate journey started. So I actually started in the human resources space, where I was working as a HR person. Okay, and specifically in training as well. Okay, so that's when I realized one of the things which came to my mind at that time was, if you look at any company, and if you're working, there are two parts to any company. So there is a part which generates income and business for the company, and then there is a part which is supporting the company. So I realized that human resources function was a supporting function. And when I looked at people who are in sales, when I looked at people who are in other functions, they were more important to the company. So I realized I want to be that. I want to be I want to be a part of an important function in the company, not just a support function. So that led to me developing some skills in technology. So that's when I moved into what is known as HR technology, where there are applications for payroll management and things like that. Okay, so that's what I did when I was with Infosys. And after doing all that for 6 to 7 years, I realized that is not what makes me happy. And this is where the usual philosophical side of me comes in, where I always ask this, is this what I want to do? Is this what makes me happy? The usual existential questions bother me. And I thought, okay, maybe this is not, the corporate life is not for me. I should get into academia.
Okay.
And getting into academia meant doing a PhD. And I thought, okay, let's get started. Let's do a PhD. And I enrolled in a PhD program with a university called NMIMS in Mumbai. And during the PhD program, I was also dabbling with stock markets on the side for myself. Okay, so it so happened that I developed more interest in stock markets. Not that I wasn't investing prior to that. I was investing, but I was more of a novice investor rather than, with the limited knowledge that I had, whatever one gets as a part of your MBA. But I wasn't really, anywhere close to knowledgeable, rather. Okay, so I tried to do things, and while I was doing a PhD program, I had a lot of time with me. So I started, exploring the quantitative side of investing. Okay, so I had data with me. I had applications like R, which is not so common, but it's a language similar to Python, which is used for statistical analysis. So I started doing that, and I started spending more time on that than my own PhD work. And a few years of that, I realized that I think I should stop this or come out of this PhD program and start doing something in the markets by myself. And that was my transition, my formal transition to financial markets, from being, a PhD scholar who was also teaching. So that is where the professor part comes in, because as a scholar, you also teach.
Yes.
And so that's when I realized, I think maybe, financial markets, looking at financial markets from a quantitative standpoint is what is something which interests me. And yeah, it's been close to a decade now, and I've been able to hold on to this interest. So hopefully, trying to make some dent in this space. So yeah, so that's the story.
I mean, that's amazing. One thing that struck me is you said that while you were in your corporate, you feel like the people who are in the sales, the people who are in the say the marketing people, or say the engineers people, they are more kind of their front role. They are generating revenue, or they're generating profit for the company. While on the other hand, the HR, or say the operation people, they are mostly they are supporting the company. They're not generating the revenue. So when you say that, what do you feel? I mean, is it which type of people play a more important role for the company? Because I feel like, of course, these people who are generating revenue, the sales people or the marketing people or the engineering team, they are doing a lot of for the company. But for them to keep running, there has to be a supporting the operation team, the HR team, who are keeping the office in unity, who are keeping the office in charm, who are actually forming connections between employees of this office, right? So I feel, of course, they are not generating revenue, but they also play a very important role. So which group of people are more crucial or more important for the company?
See, I think it would be unfair, because when I use the word more important, or I don't remember if I did, but I don't think that's where I was coming from. I'll, let me change the context here. So as a naive 24-year-old boy, that is how I thought, because they were making more money in terms of compensation than people in the support and operation roles. Okay, so I said I want more money, and I think I could make more money by being in those roles. But if you ask the same question to me today, my view would be, we need to, at the end of the day, as individuals, figure out what is it that we want to do. It's nothing to do with the role's importance, but you could be, you could be a great HR person, you could be a great operations person, and there would be a great value for you in the market. But my recognition is to figure out what is it that you can do better, so that over a long period of time, you would be able to master that area, become better at it, rather than, finding something. And that's what happened, right? I mean, though I started off with that naive view, I wanted to be at the front, leading the show. But I did, if you see my career, I've been all over the place. It's not a linear career where I, focus on one thing. I kind of dabbled with a lot of things, and then finally, hopefully ended up with something which has a greater longevity in my career. Okay, so that is how I look at it today. It's not about one thing being important than the other, but what do you want to do? I mean, so even if someone is working in a support function today and they're not happy, so fine, maybe look at a non-support function role and work there for a few years and then come back. I mean, life is anything but linear.
Exactly.
So I would say, yeah, explore. So maybe you like operations more. Fine, do it. Just doesn't matter. Okay.
So,
So
at the end of the day, you suggest that find something or do something that you believe that can last for a long time.
yeah, so it has to be it has to be an intersection of what you're good at and what has some sort of a market value. So that is what is a job at the end of the day. Okay, so you may like painting, but the way you paint or your output may not have any market value, so you would find it difficult to sell that skill. But maybe you may like painting, but if you could develop the skills of an illustrator. So now we are transitioning using your skills as a painter, but kind of converting that into a product which has got a greater market value, and then you would have a better career. So that is what I mean. So figure out what you're good at, okay, and then find the intersection between what you're good at and what the job market wants, and that's the space to be.
Wonderful. So coming to this point, like you said, I just want to connect with one thing. I'm sure you heard of this Jordan Peterson, right? Dr. Jordan Peterson.
Yes.
So he always say, do something that is meaningful, and if happiness comes in between, accept it or welcomes it. So the first thing is not about happiness, but the first thing is meaning. So sometimes, especially for people like me who are in the early 20s, who are actually entering the job market for the first time in life, at this point of time, sometimes we do have lots of confusions. Sometimes we don't know what is going to work for us for the next 10, 20 years, right?
Correct.
The market is changing, the world is changing so fast, and we don't even know what is going to happen next week. So at this time, sometimes we think of, hey, let's enjoy it, let's have a drink, let's kind of do whatever we can, and just don't just forget about everything. Sometimes we often go at that point, and it happens in the job, it happens in the world, it happens in the world, right? So like, what will you say when an employee is not happy with the job, but he or she knows that that particular job is going to be more meaningful to him for the next say 10, 20 years. Say suppose he don't want to be in the job, but he knows that if he stays in the job, he's going to have more experience, he's going to make money, and maybe by 30, or say by 30, 40, he can retire and he can pursue something he loves, right? So he is sacrificing what makes him happy for something more meaningful to him. So what is your thought process, or what do you say in that regard when we come across saying, hey, do something more meaningful, and if happiness comes in between, welcomes it?
Okay, so let me share my view on this. So the question which you ask is relevant to a small percentage, I think, of privileged people who can even ask that question. Okay, so what I mean by that is there are a lot of people who don't have this choice today. Okay, so given the country we are in, given the rates of unemployment we are in, so there are a lot of people who are unfortunately would be happy to accept whatever they get. Youth, I'm talking in particular. Okay, so there's a majority where the choice does not exist. It's not a great thing. It's not a great situation to be in, but that is what it is. So that's the lowest end of the strata where, you don't have a choice. So you're willing to do any work. So this whole idea of happiness and meaning is really not something, because all that they need some job to get, bread on the table. So that is one extreme. Okay. So from that, if we kind of move slightly up in terms of social strata, you get, other people who may be in the formal economy, but still belong to the same idea, because they need to be in a job to pay their bills. Okay. So again, they don't have a choice in terms of, selecting an area, whatever pays them optimally, they would go wherever there is a match in terms of their skill, and whatever pays them optimally for that skill, they would go and do that job. They may think about being happy, they may think about meaning, but it may not have any relevance because they don't have a choice, essentially. Okay, so a large majority falls under that. There would be a minority which can even think about this question. Perhaps people like you and me who could bring this up as to, should I sacrifice my present to do something for happiness later? For that minority, I'm getting to that minority right now, because that's the only minority where this question fits in. Okay, so for that minority, I think it's a very, very difficult question to answer. But I used to think in the beginning, like you said, sacrifice your present to kind of, live a better life for future. But then when I started reflecting on this, and this is exactly the idea which my parents taught me, okay, where, sacrifice your present for a better future. So it means when it was 10th grade, it was sacrificed this year, get better grades for 10th, and life would be set. And then 12th grade, same thing happened.
Yes.
Okay, sacrifice that year, you would be better off. Then graduation, the same. So I was, by the time I did my post-graduation, I was sick of that particular logic, because, you know, even at post-graduation, it was the same thing. Just sacrifice this 1 year, you'll be good. And then came, you know, the job market, where again, the same story happened, sacrifice a few years. So I somehow questioned it, that this is not ending. I'm, you know, I'm sacrificing all through, but I'm not really seeing any output. So that is where I think we need to look for some balance. Okay, if you can afford to. It's not necessary that you would find meaning in everything, and you may want to go with happiness, because happiness at least signals what you're comfortable with. Okay, we do not know in the long term whether you'll be able to find meaning or not. But you know, I'm not talking about pleasure as such, but at least are you comfortable doing what you're doing, or are you feeling miserable every day when you come back from work? Okay, so if you have a choice to make, I would say skew towards something that makes you comfortable, because if you are working in an environment which makes you unhappy on an everyday basis, then the odds are that you would not hold on to it for long. So you would anyways find something, as humans, if you have a choice to come out of it and select something else. So I would say that don't sacrifice happiness, you know, for the sake of something long term. Immediately. So happiness in the short term is also so going out on a weekend and you know, having a good party with your friends is equally important compared to sacrifice. Maybe you sacrifice a few weekends, but don't kill yourself in the process, because we don't know the future. So you said that, you know, you brought that point in terms of you said we don't know the future. No one knows the future. I don't know you know, the future either. But at the same time, what we do know is, you know, you cannot sacrifice all your present for an unknown. So that you regret later. So this is where, you know, Jeff Bezos has, I think, used this term called regret minimization. So I, as I've gone older over time, I've realized regret minimization is a better way of evaluating what you want to do. Okay, so in other words, you ask this question: if you do this or if you don't do this, are you going to regret it in the long run? So if you feel that I think I will regret it, okay, then you go ahead and do it. And if you think, no, I'm not going to regret it, you avoid it. But how you process this question changes over time as you get older. This is the difference. Okay. So if you use the same regret minimization question when you are in your mid-20s, the answers could be very different. Okay. And if you use the same questions in your 40s, the answer could be very different. Okay. So but that's a framework which has been of use, some use to me, where I ask, you know, this to myself for all personal questions as well as professional questions. What would I regret more? Okay, so that's one way of dealing with it. Would you regret more avoiding that particular opportunity, or would you regret more, you know, continuing with that opportunity? So that's how you look at it.
I mean, listening to you, I can already see that you got lots of wisdom, you got lots of conviction in you. So when I think again, you were in the corporate field, you were working as you were in the industry, in the corporate sector, private sector, and you think like, oh, I think I have to go to academia. I have to go back and do research or read more kind of thing. So that signal, or say that says that you are more knowledge oriented, you are more context oriented, rather.
That's correct. That's correct.
Like, I do understand that you will have a practical oriented things, but more like you're a context oriented, research oriented. So correct. When you see this right now, especially in the corporate sector, or say especially in the startup, so sometimes funders, they do need to have a practical knowledge, but at the same time, more so, funders need to have more contextual knowledge, contextual oriented. Because if you see, most great funders, they are great writers. Even Jeff Bezos, he used to write really well crafted emails. Even I think Steve Jobs, even Bill Gates. If you find these great founders, they are great writers. That means they are context oriented. So just like you, who shift from the corporate, I know in corporate, you may not have to write so much, you may not have to research so much, just like you are in the academia, or like right now you are into research. So like, can you make some differentiation of what today's funders, or what today's startup, or say what today's young generation need to understand the difference of these two, how to balance these two, more practical or more research-based in terms of viewing the world, in terms of viewing startups, or even in terms of the startup funders, great funders?
Yeah. Okay. So let me structure this question a different way, because I though I have spent time in academia, but I do not differentiate the real world with, let's say, the theoretical world. I don't differentiate it.
Okay.
Okay. So the way I define theory is an abstraction of reality.
Okay.
Okay. So that's what is theory. So theory does not happen out of thin air. Theory is not supposed to, at least, be disconnected from reality. Okay. So when you throw a ball and it falls down and hits the floor,
yes,
you observe it. Okay. And then you create theory out of it. That's how
yes,
theory is supposed to be. So theory is not disconnected from the ball. Theory is just an abstraction of what is happening in reality. Okay. But now coming to the question where you said a founder or an individual's ability to, straddle the worlds of practice and straddle the worlds of theory or research, I would probably take, having worked with a lot of founders, I would probably, bring in two different variables here. Okay. So one is this variable of ability to abstract things out. Okay. So which is, in an academic sense, is theorizing. Okay. So abstract things out means you observe your customers or you observe people, and then you think, I think people behave this way. I think people inherently want this particular thing. So all that is, in a way, creating a hypothesis in your own mind that I think people are like that. And then you kind of explore it more, you test it out and figure out. So you have an abstraction. Now you have a theory in place after testing that hypothesis that I'm sure people behave this way. Okay. So that is one competence which I feel all good founders do have. Okay. One way or the other. So their ability to abstract reality into an idea, because that's the idea which they're trying to build on. Okay.
Yes.
So some founders somewhere thought that I think people would love to get food served at their homes if they don't have to go to the restaurant, if they don't have to drive down. I think it would be a great idea. Someone thought about it like that, isn't it?
Yes,
okay.
Yes.
And then that gets layered. So then, you speak with more friends, get more ideas, and then you kind of run a pilot. Maybe you get more conviction about that idea. So there is a hypothesis, you test it out, and then you validate it. But that abstraction, that observation, observing reality, observing people, and creating that hypothesis, I think that's a very important skill which most founders do have. I have not come across founders who don't have that. It could be incorrect. Where founders could go wrong is their inability to test it out. Okay, so that is where it becomes difficult. So there are founders who are very good with testing their theories, okay, and being modifying their theories quickly, and some are not good with it. So that is one. So to summarize, the abstracting reality is one competence.
Okay.
The other competence, I think, what differentiates successful founders, and the writing point which you brought in, I think fits into this abstraction thing. Writing is nothing but an output of this abstraction.
Exactly.
You may be good with it yourself, or you can get someone else to do it for you. But the core of writing is ideas, abstracting reality.
Yes.
The other part, which I think is equally important for a founder, is the dirtier part of running a business. When I say dirtier part, it means hiring people, following up with ideas, getting projects done. If you're in a regulated space, dealing with the government, all of that messy thing, you have to be okay with dealing with that mess, because irrespective of what kind of a product, what kind of a space that you are in, CEOs or founders in the initial days have to deal with a lot of this outer world. Okay.
Exactly.
Okay. And that you have to be comfortable with. So that is where, the difference comes. So your ability to, so you are an idea generator, your ability to abstract things, you understand people, and still you can execute and get things done, get your hands dirty in terms of running a business. Okay. So, and that's not easy. You need to have both of these competencies together. And sometimes there could be two founders who bring these complementary things together, but at the same time, it's not necessary. If you're individual, you need to have all that together. If you're founders, you may be able to find, but still, even if you're able to find a co-founder or someone else who works with you, these two aspects of a job are going to be there as a founder. So that's how I would look at it. That's how I would answer your question.
Okay, that's really sums up well. Just a very quick questions. So do you think a founder should have more coding skill or a writing skill? If they have both, that's good. But if they cannot have both, which one do you think a great founder should have, a coding skill or a writing skill?
I would go with, okay, if you are giving me a choice, if you are forcing me to make that choice, I would say writing skills any day. Okay.
Writing
skill. Over coding skills. Yes.
Okay. Oh, what do you think so?
Why I think so is because it's if you don't know what you are going to build, if you don't have a sense of the world, which is what writing would give you, then what are you going to code? Okay, so I mean, good to have something as some solid skills like coding, which are very, very measurable skills. They are not
Yes.
really. At the same time, that's not going. There are many coders, but then there are very few founders. Okay,
Exactly.
and the reason being because there's more than that. Running a company is much more than that, and ideas don't really have to come to you just because you know coding. So the other way around is good. Okay, so you're great with writing, you're great with ideas, you're great with abstracting things, and you also know something on the technology side, which is good.
Yes,
Okay,
yeah.
but you don't know anything about the world and you're only good with coding is not an ideal founder material according to.
Wonderful. So if we see today's companies, if we see today's startups, we all know that traditional media is already dead. Say in last year alone, people who watch like Joe Rogan podcast are more than people who watch CNN TV. The viewership of Joe Rogan podcast is much more than the viewership of CNN.
Yes.
And at the same time, right now, startups, companies, all the corporations are fighting to create their own media house in-house of their company, right? They're fighting to create their own media house because everybody knows that media controls opinions. Everybody wants to be in the media space.
Yeah.
So like, what do you think of this when companies, or say when corporations, when startups are focused more on building media company, building in-house media rather than building the product or a service?
Okay, so I think this transition happened post internet technology came in, right? Because the technology allowed access to people directly. So if you are a company, the only way you could reach out to your probable users 20 years back was through traditional media. It could be magazines, newspapers, television, and so on. And now what internet did was to bring all of that together, bundle it in one composite, and go straight to the user. Okay, so now that has changed. But it does not mean on the media side much has changed. Okay, it's only the medium that has changed. Okay, so you get what I mean. So you could still have CNBC or whatever, CNN as in your example, buy over Joe Rogan, which is possible because they've got some accumulated wealth over so many years of running a media. They have some brand value, so they can acquire a Joe Rogan or the likes of him. Okay, so it is the only thing that has changed is the way internet has given access to anyone for that matter. Okay, individuals or media corporations to directly go to consumers. Okay, so but one of the things which has happened is, which will happen more, is certain individuals who we can call as influencers or celebrities, they now are not dependent on traditional media to build their brands or to take their voice directly to people. Okay, and that again is a very commercial concept, because at the end of the day, why would someone want to build a brand? And that is what you would see happening. Okay, people build a brand and use it for some sort of a commercial end, right? I would want to promote a company, I would want to sell an idea. So what an advertiser was earlier doing, let's say an actor was hired by an ad agency to sell it could be sell a soft drink or sell anything. The same thing now is slightly different, because now individuals or celebrities or influencers have the ability to build some content, create some following, and the companies would come to you because you have following. The same thing was there earlier. The actor acted in a few movies, created a fan following. Okay, and because he or she had a fan following, the media was going to hiring them. Now it's the same thing, but it's spread out. Now there are many smaller very specific, context specific influencers. So within finance, you may have three, in personal finance, there could be an influencer. In stock market, there could be a different influencer. So things have got more granular. Okay, so there are more people who influence more micro spaces, but that's how I see it. But corporations do exist. Mega media houses still exist, and that would continue.
That's wonderful perspective. So let's talk about what is happening in the world right now. The market, the stock market, the crypto market, the inflations. So if we see the US inflation, it is at all-time highs since the past 40 years. The interest rate, they have been increasing interest rate every quarter, I think. Right. And also, correct. If we see the liquidity injection, so-called printing of money out of thin air. They have printed more than 40%, I think 40 or 50 something percent in a span of 18 months.
Correct.
They have spent like they have printed US dollar that is like 40% out of thin air in the span of 18 months. That is like really worrisome. And what politicians do is when people face a problem, they just say, let's print money and give it to them. That's what exactly happens in 2020. That's what exactly happened in the last 2 years. So right now, inflations are at all-time high. Interests are all-time high. And we already see that big companies are laying off their employees. Or companies that are not laying off their employees, they are freezing the hiring, they are freezing the recruitment, right?
Correct.
So if we see all these things, because you are into the market, you are a man for the market, you know how market is going right now. So what is your view right now? What is happening in the world in the big picture?
Okay. So taking off from where you started, yes, there is. So if you go back pre-pandemic, obviously we had all-time low interest rates, and inflation was also low. Okay. But at the same time, when pandemic happened, governments, or at least, US specifically, did not have any other choice but to engage in what is known as QE, or quantitative easing, because, they realized they had to, bail this, be it stock markets, be it, the economy. They literally handed out people checks. Okay. In the US, at least, where, people were given money, there were checks which were coming to people's, home addresses, where they could, to help them survive. Okay. And to do that, you obviously have to create more money. And that's what the world did. Now, when a country like US creates money, okay, it finds its way to a lot of places. Okay. So it's like water, right? Okay. So if there's a little bit of leak, and it's not a tight system, we are a global economy. So if US prints more money, it goes in the hands of people. Now, what do? People buy goods and services, maybe whatever they can. Okay. So if, institutions get that money, they have to find a way to use that money to generate some return. So that money would now come into countries like India, emerging markets, and so on. Okay. So that is how that whole QE does not necessarily stay within a country which started it, but it kind of starts flowing out. Because if you are a citizen, you would buy stuff, and you may buy stuff which is manufactured in China. So there is a Chinese manufacturer who would benefit by that. And so it's all, the effect of this QE is all over. It happens all across. Okay. So that is one of the things. Now, obviously, it had to be done at an unprecedented rate, given the way pandemic shut down everything. So you really had to help people out. There were job losses and so on. But then this phase was, but that led to another. So usually, every action has got an opposite reaction, right? In physics, the same thing happens in economies as well. So the moment you do something, you are going to see the opposite of it. It may not be immediate, but you would see. And the second phase was where a lot of these technology companies, initially during when money came in, some people who had surplus money started investing back in the markets. So now your markets are, flush with liquidity, because money is getting printed on one side. Okay. It is going out to different countries and different markets, different stock markets. It's also getting fed into your own stock market.
Exactly.
Okay. So now you see a boom in the stock market because you created some money. When I say you, it means, let's say, the US government.
Yes.
Okay. So, and that liquidity is going all over to the rest of the world. And there is stock market booming everywhere because there's money to buy stocks. Okay.
Exactly.
And typically what happens in these kind of environments is, if you look at the way stock markets work, there are indexes. So indexes are the top stocks with the highest market cap. So if you are an American institution where things are bad, let's say there's a pandemic going on, but you have surplus cash with you and you want to deploy it in a country like India, what you would do is you would take the safest bet. And the safest bet in India would be the top 10 companies, top 15 companies, or 50 companies.
Yes.
Okay. Because they are the ones who have the ability to survive a pandemic.
Yes.
Okay?
Yes.
So all the money would come into indexes in some way, and your indexes would go up, and that's what happened. Okay. And this continued, be it a narrative. And these are all things which go on a spiral. So once things move up, there are a lot of other people, and pandemics, pandemic does not stay where it is, right? Things evolve.
Yes.
So we figured out there is a solution to this problem. Then an antidote came in. Then you had the vaccine and everything. Then people had a better view of the world. Oh, things are fine now. Things are not as bad as we thought. The economy is not going to be down for the next 3-4 years as we thought. in March 2020. So all that narrative builds and the things are now perfect. Let's just, so more money comes into the market. When the market is already going up, people think everything is fine now. So it's like a cycle of a positive cycle which builds on it itself. Okay. And that is what was happening in the US and other markets and so on. So we had a sort of a bull run which went on. Okay. So now it's all cyclical at the end of the day. So this bull run continued for a while, but it had to stop at some point. Okay. So more money in the market causes inflation, and that is what it did. And finally, we've got to a point where there is extremely high inflation. Okay. So now when inflation goes beyond a point, governments want to control it in one way or the other. So again, the mother market, United States, which started the QE, okay, flushed all this money to the rest of the world, has now decided, okay, enough is enough. I think we need to turn the tap off now. Okay. And when they turn the tap off, it obviously has a similar effect in the rest of the world. Okay. Just the way turning the tap on had an impact on the rest of the world, turning the tap off, QT would also have equal effect on the rest of the world. And they would have to induce what is known as, a recession, so as to bring the inflation down. Okay. It is by design. But then the problem with something like inflation and, its relationship with the market is not really direct. Okay. So because inflation is not something, there are parts of inflation which are predictable, and then there are parts of inflation which are not predictable. Okay. So a stock market is an anticipatory, mechanism, which means it tries to think in future. Okay. That's what is a stock market. There are a set of people who are speculating, and there are investors who come in and put money, and they all have a view about the future.
Yes.
Okay. So, and that's what is a market. So you have a view about the future, and based on that view about the future, you put in money or you take your money out. Okay. Now, when you bring in the concept of inflation in it, if inflation was something like, steady, where you could predict in a way, in a quantitative way, and say that the inflation for the next 10 years is going to be at 10%. No problems at all there. Okay. Because firms which are in the market, which are building stuff, which are in the industry, they would be able to set their compensation. They would be able to do things because they all anticipate 10%. That's all it is. You get used to it. But the problem is when you cannot anticipate that inflation correctly. We know that inflation is high, but it will go down. But how much will it go down? We do not know. Or will it go up before it goes down? We don't know that either. So this uncertainty around how this inflation is going to play out feeds into the market mechanisms, and that makes it difficult for at a fundamental level for companies which have to take a view about the future, because it's not just about the markets, right? Markets are also full of companies. It could be HDFC Bank, it could be a Reliance, it could be Hindustan Unilever, it could be all these companies, and they all have to make some assessment of the future to make their investment. And if they can't do those assessments, they'll say, let's pause. Because they can't make an assessment about the future, whether the prices are going to be high, the prices are going to be low. So they will pause. And when they pause, your economy pauses.
Yes,
okay?
yes.
So we want this uncertainty about the inflation to go. That's specifically what we would want. And that would take time.
Okay.
Because that is not something which happens over a few months. It would take anywhere between 6 months to 1 year for us to get a sense of how the tightening, which is happening in the US, would affect the rest of the world. And the phase in which we are unsure about it is the uncertain phase where we are right now, and where we would be for the next few months. Or up to a year, maybe. We do not know. So that is one part. The second bit is there are two parts which I want to highlight on. One is, even if you're an economist who understands the world, it's really hard to predict how the future is going to be. I really don't know of anyone who predicted that there would be an immediate bull run right after COVID. Most of the knowledgeable people I interacted with, they all expected the recession to start then. So that could have been a trigger for the recession, and then it continued. But what happened was just the opposite of it. Sorry. So you had a bull run. Then we are now staring at a possible recession. So the point that I'm trying to make is, even if the experts or the economists are saying we may have a recessionary phase in the economy for the next 6 months or 1 year, we really don't know. It could be 2 years. It could be lesser than that. But, it's very difficult to point to a specific period in time. And, we can't really trust anyone. It is a phase which would, because the reason no one knows about it is because these are complex economies, complex systems. We do not know how, different countries, different parts of the economy react to one, one one action which is taken by a large economy like US. Okay, so we do not know how it kind of pans out, and that's the reason there's uncertainty. So let's see how this, that is where we are right now. So it would be an uncertain phase, I would say, for the next few months, and definitely, I do feel there's another way in which I look at it as a quant, someone who works with market data.
Okay.
So it's a very simplistic view, but I think it holds. Now, if you go back, if you look at an index, okay, so we have NSE Nifty 50 or NSE 500 kind of an index, and you go back past 15, 20 years, you see something called as an average annual return. So this is how much on an average or a cumulative annual growth rate. How much does the index increase in value on an average? Okay. Now, if you had a 50% increase in a given year, okay, and I tell you that that 50% is like one standard deviation or a couple of standard deviation above the normal. So, and if that 50 has to average out to 10 or 11 over the next couple of years, then what's the number that's supposed to be there? Okay, it obviously cannot be 30 again. It obviously cannot be 20 again. It has to kind of average out to 11. It has to average out to, much lower than 50. So what it means is over the next couple of years, if you want the average to be 15, then, you are looking at negative growth, or you are looking at negative returns in the next couple of years, because the average will catch up. Okay, so it is not going to continually be going up or on the downside as well. So that is one way to look at it. So if you had a substantially high growth rate on a given year, and the averages are nowhere close to that growth rate, then the average will catch up. And the only way the average will catch up is the subsequent years you may not see that kind of growth, and the average would come down.
I mean, that's very informative, and I have so many questions now. But the first question is, like you said, things that happen in US, it subsequently affect the rest of the world. I want to understand, because the US dollar is currently the world reserve currency.
Correct.
Before 1971, they have a gold standard. Now we just only have the fiat standard. And if we see in the recent in the past month, between Russia and Ukraine, after the war breakout, people who deals with Russia, they don't deal in US dollar anymore. They deals in Russian currency, which I don't remember which one is that, but they don't deal in USD anymore. And if I see even China and Russia, they deal with each other not in US dollar, but in a different medium. And see, if we see right now, the world is getting to know that US is doing the necessary evil. Like you said, the government has to print out the cash or say the check and bring out to the household, so they can survive the pandemic, they can survive the difficult time. So since they don't have the gold standard, the world somehow is getting to know how the US dollar runs the economy of the world, and they want to start avoiding this one. And if we see right now, countries are starting to avoid the US dollar and deals with international transaction, international exchange through a different money medium. And if we look carefully, there are smaller countries that are starting to deal in Bitcoin, right? So the first question is, I want to understand how this world reserve currency system affect the economy, especially during the time of recession. Though we are not officially in recessions, but somehow we are in mild recessions, right? Kind of something like that, because if we see the data, the interest rate, the inflations, we are already in a mild recessions. Correct. So I want to understand how this world reserve currency play a role during the time like this.
Okay, so let me answer this question by bringing up a fundamental element of what exactly is money. Okay. So the role that money plays, if you go back in time historically, if I would come to you, Azuko, we all were tribes at some point of time. So you may grow some, let's say both of us belong to two agrarian tribes. You grow rice, I grow lentils. Okay, we just exchanged it for some value based on an effort that we put in to grow rice or lentils. Okay, and then at some point, when metals came in, we could exchange. We knew there was a value to gold because it was limited in itself. So what we did was we could, mint gold, silver coins, and so on.
Okay.
And we could use that as an exchange for the rice that you would grow. And maybe, you could give me gold instead of giving me rice. And, I could buy or sell things with that value. And that is how it evolved over a period of time. Okay.
Yes.
So gold as a reserve was a concept which was an extension of it, right? So what that meant was we would not physically exchange gold, but we would have a paper which would promise some part of that gold to you when I give it to you. So it was a promise to give you a value equivalent in gold, which the government is holding. That is what it was. And as you highlighted in your question, at some point in 1970s, we moved away from gold standards, which means this promise is now dealing with that gold. It is just a promise now.
Yes.
Okay. So it is just a promise that, if you hold this particular paper in your hand, its worth is whatever is written on it. So that's the promise. Now that what that does is that particular promise becomes the key. Okay. So if you look at what exactly it is, so if you give me a 500 rupees note today, the reason I accept it is because I trust you, I trust the government that it has printed a valid note which has some value.
Promise.
Okay. Yeah, it has a promise. Okay. So it is a store of some value. So there is an element of trust and promise. And then it has a store, it is a storehouse of some value. So that 500 rupee note which you give me is worth something. Okay. So that is why I'm accepting it from you. Okay. At the same time, it is exchangeable also. So everyone accepts it. And that is why, so I can give it to someone else and that someone else can give it to. So everyone, it's a commonly understood, accepted storehouse of value. Okay. And at the same time, as I said, so it is also something which is trusted. There's an element of trust. There's a storehouse of value. At the same time, it does not fluctuate. So I reason it 500 rupees is worth 500 rupees more or less. It would be stable. Okay. So the reason I bring this point of stability is because you brought the point of Bitcoin. Okay, and the whole idea of decentralized money. And one of the key problems with it is stability. Okay. So if 500 rupees is not 500 rupees, or its value keeps fluctuating, then it's very hard for me to use it as money.
Exactly.
Right. So I want something which is stable. So if 500 rupee buys me, let's say 10 kgs of whatever rice, or I need to be able to buy 10 kgs of rice. Tomorrow, you cannot tell me, or after 1 hour, you cannot tell me that 1 hour back it was 500 rupees, but now it's 1,000 rupees. That's how Bitcoin moves, right?
Yeah.
Okay. So you can't really do that. And you need some stability as well, because as humans, we cannot process that kind of volatility in terms of currency values. Okay.
Yes.
Now coming to the question in terms of how, why, how currency or how US dollar is, I actually would go, I would still say that US as a reserve currency of the world is still respected. And the way, if you look at what has happened in the past several months, rupee has gone down. Okay. And so has the value of several European currencies, which have gone down with respect to US dollar. And why does that happen? The reason that happens is because this trust element is key when it comes to any currency. Okay. And when people lose trust in their currencies, they would want to hold currencies which are trusted more.
Exactly.
Okay. And when they want to buy another currency which is trusted more and sell their own currency, the value of their home currency goes down. And then what they're buying into, because they trust. Okay?
Basically,
so
demand and supply.
Yeah, it's a demand and supply. Simple as that. Everyone wants US. Everyone wants to hold US dollar. Okay. So if everyone does that, I mean, this is not the only reason. I'm just trying to oversimplify it, but this is one of the reasons. Okay. The value of US dollar would go up. So the element of trust as being the world's reserve currency is still there. Okay. So the world at large still does not trust, let's say, China, even though China is a huge economy today. But in terms of their, trusting China or is nowhere close to what the world would trust, rest of the world would trust, let's say, America. Okay. So that is where the difference is. Until that stays, I think America would hold to this particular power with respect to dollar, because people would want to hold on to dollar. They know that the value of the dollar is going to stay where it is, and US would do whatever it takes to hold its power in the world economy. So that is the reason why it still exists. We don't know till when. It's a very long process where a competitor comes in, but as of now, US dollar would stay. And, the problem with coming to this whole idea of cryptocurrencies, I think it has a couple of problems. One is while it is decentralized, okay,
Yes.
but then this decentralization itself is a problem.
Okay.
Okay, because if something is decentralized, the role of money is also to kind of use money as a lever for several economic outcomes. For example,
Okay.
we just discussed that the central government started off the QE process and handed
Yes.
out checks to people so that people can deal with the crisis.
Yes.
Okay?
Yes.
Now, how would that work in a decentralized? If money itself is not connected with, if central government is not really the entity which is controlling money, how would a Bitcoin like decentralized currency be used in that context? Okay,
But
so
don't you think the problem won't even exist if the world use only decentralized medium of currency, something like that? Because see, this first of all, why government, why the problem happens? The problem happens because of this trust, which we discussed. The people trust so much of the government, and because say the Federal Reserve or say the central bank. And because the people trust the central bank so much, the central banks somehow have the power or say the authority to print as much money they want.
Correct.
And because the people trust them, even if they print out of thin air, still then they trust them. So because of this cycle, like everything is a cycle, right? Again.
Correct.
So because of this cycle, they print out, the people trust them, the problem happened. Again, the government print out, the problem happened. So somehow it's become a circle. So
so look at it this way.
Okay.
So government is, I mean, you can't get rid of the government everywhere. So because
yes, we can.
Now, we are talking about a promise. We're talking about trust, and building that with something which is, decentralized is extremely difficult for humans to even understand. So I'll give you an example.
Okay.
So it's an unrelated example, but it still, talks about something. So let's say there are a lot of people of a certain generation who are still very uncomfortable dealing with money matters online. I'm not even talking about, things like Bitcoin or decentralized currency. I'm saying dealing with money. So if you look, my father's 80 years old. Okay, he knows that he can transact with Google Pay and things like that, but he still likes the feeling of holding that currency note in his hand and going to the shop.
Yes.
And because there's an element of trust that I'm physically carrying the money and giving it to the other person.
Yes.
Okay. So now, and he also knows, but here's the more important thing. He also knows that, he can go to the bank and there is some human being sitting in the bank he can deal with. But if you tell him that, hey, you know what, it's all online. There's no human being and there's no one who heads an entity. Okay. There's no one you could escalate to and talk to. Then, humans are humans. They would want someone to talk to. So that is a critical element of trust, which does not exist in the decentralized mechanism of currency.
That's the whole point, right? Don't you think that's the whole point? Because
but I'm just arguing against it. I'm saying that people want someone to some human being to be the lead of a decision.
Yes.
When it comes to something which is totally decentralized, I don't know who does what, so I don't trust it.
Yes. So
in other words, even if I don't trust the government fully, I'm still okay with it. Because I know that there is someone I can go back to rather than, dealing with something where I can't go back to anymore.
I think maybe we can look in a different perspective. So if you see in the perspective of money or in the perspective of how things has evolved with the concept of money, if you see Bitcoin doesn't have a leader. Bitcoin doesn't, you don't have to trust Bitcoin. Bitcoin doesn't promise any promises. Bitcoin doesn't say, hey, I'm going to grow at this percentage in the next 5 years or something like that. Bitcoin doesn't say anything like that. Or say, Bitcoin even don't say that in the next 50 years, there will be more than trillion Bitcoin. Bitcoin never say that. Bitcoin doesn't have anything to say. It's just that I understand most of cryptocurrencies fall into your narrative. But for me, I don't trust most of the cryptocurrencies. But I don't even trust Bitcoin. But the reason why I see Bitcoin as something, a concept of money that can change our world is because this concept of money that Bitcoins give, a permissionless, it doesn't need a permissions, a trustless, a decentralized, and open where anybody can participate without any discriminations, and nobody can control it. No single entity can control it. There's no leader, there's no CEO, there's no president for Bitcoin, right? So because it is such a system, this system needs to be understanding economic perspective. This system has to be understanding financial perspective. This system has to be understand in computer science perspective. This system also need to be understand historical perspective, and this system also have to be understanding social, political economy, or say even the geopolitical economy, right? So in one way, I do understand your point. We cannot get rid of the government. Our society haven't evolved, or I say the whole human civilization haven't evolved to that point where we can get rid of government. If we get rid of government, who's going to build the road tomorrow? Who's going to do the drainage tomorrow, right? So we haven't reached to that point. But in one way, if we see on the concept of how we can transact, how we can pass the informations, I can safely say I can give a bet on Bitcoin. No other cryptocurrencies, just Bitcoin. I can give a safe bet on something like that. Yeah.
So I know. So you have a very revolutionary take on it. And conceptually, what you're saying is possible, but then that's way far in history, because Bitcoin or a decentralized currency would have to fight its way through to build that trust. Okay, and fighting that way through is going to take time, because
it will take time.
It will take time, because what does it take for any government to ban an entity like that? So that's quite possible, right? So if you look at these changes, they would happen over a very long period of time. Okay, because a government can just say the only thing that is allowed is fiat currency. So end of story. Okay.
Yes.
So a lot of those things are possible, which can bring an end to it, at least pause it for the next few decades. Possible. Okay, we do not know. And the reason government is not doing it, because the government does not see at the moment, perceive a threat from decentralized currency. The day they do, they would do something about it.
Exactly.
Okay? So this is my view. And so that's why the road to the future, which you are describing, is probably beyond my lifetime. Is my view. Okay, I could be wrong.
Yeah. I mean, it's always good to have this conversation, this kind of debate. It's not actually a debate, but a positive view, because of course, in one way, I may hold a different opposite view than yours. That doesn't mean I don't disagree with you.
Absolutely.
It simply means that I have a different idea around it, something like that, right? So moving on, like, should we discuss about growth and speculative asset? Because see, if we see the last 2 years, like you said, business are not running because of pandemic lockdown. People are shut at home. People are not going to office. Business have been shut down. Schools are off. Offices are off. Hospitals are running, but too crowded, too rush. Everything comes to a standstill. There's no tourisms, right? There's no concert. There's no events happening.
Correct.
But one thing is blooming, that is stock market. In the last 2 years, so many stocks has reached all-time high. And if we see in the American context, in the United States of America, the New York Stock Exchange, the stocks like AMC, game stocks, they have reached so high at one, in a particular day, right? So there has been those kind of speculative asset. Though the company may not be doing well, but their stocks has been doing really well. So in a situation like this, when people hold so much into something that they bet on it, they speculate on it, even though there is no growth. And I also want to bring a small differentiation here. Though this is money, stock market is money, but at the same time, stock market may not be turned as wealth if we see in a speculative perspective. But if we see on the growth perspective, it can be a wealth. So what I'm trying to say is money and wealth are not equal. Wealth are built over time when we produce values. Money at this modern time, at this year, today's time, money can simply be printed out of thin air, right? So what will be your perspective in terms of stock market when people invest on speculative asset rather than on growth asset? Like, say, if we see Reliance stocks, these are blue chip stock, right? These people can safely say Reliance is going to grow up to X amount in the next 10 years, in the next 20 years. So they can safely invest on Reliance. But if we say a company X, which doesn't have any growth ratio, which doesn't have any growth roadmap, but still then people bet on it, people speculate on it, and everybody put money on it, and then stock market grow up, right? So what because you are from the market, you know how all these things will work. So what is your perspective on when people put their money on speculative asset rather than on growth asset?
Okay, it's an interesting question, because you're making this distinction between something which is highly speculative and something which is growth. And when you make this distinction, I assume something that is embedded in this distinction is what is growth is something which is measurable, something which is more predictive, and what is speculative is there's nothing which is measurable
Exactly.
in the present, but it's only a narrative.
Mm.
So the way I look at it is, as I shared earlier as well in our conversation, stock markets as an entity is a mechanism for pricing future. It is about trying to predict what the future is going to be. That's what we are trying to do here as a part of the stock market at a very fundamental level. Okay, so for every company, for different time frames, we are trying to predict. So when you say, when you take the example of, let's say, a big company like Reliance or HDFC, or in an American context, it could be an Apple or any of these, Google, Alphabet, whatever you call it. Okay, so companies which have established businesses, currently, you are also, speculating there. Just that you're speculating differently because you have some information with them, and there is an existing narrative about them, and you're speculating in future, maybe for the next 6 months, maybe for the next 6 years, but you're still speculating. Okay, and the only thing is you're speculating maybe based on their books, which is their profit and loss statements, their balance sheets, and so on, or you may speculate based on some other data, but you're still speculating. So to me, everything is speculation. So I wouldn't really say what folks did in GameStop. I mean, the very specifics of what happened in the GameStop is something which I wouldn't get into. But what I'm trying to say is the way an intraday trader or a short time frame trader looks at the market is no different from, let's say, an investor who we call is investing for the long term, is looking at it. Both would want to buy at a lesser price and sell at a higher price.
Yeah.
Okay. The time frame that they're looking at is different, but both are speculating. Okay, both are speculating. One is speculating maybe based on a different set of data. Okay, someone who's speculating for the day is only looking at the price, and someone who's speculating for 6 years maybe is looking at a story that the future is great based on the books of the company. Okay, so I would not say one speculation is greater, holier than the other. It's all speculation at the end of the day. Okay, so but the way the government defines it is slightly different, because they would have long-term, capital gains tax, which would be different compared to, let's say, a short-term capital gains tax, and that creates its own definitions. But then at a very philosophical level, it's all about, taking a bet on the future at different time frames.
So the time frame here is very important.
Yeah, it's all about time frame. So because someone is betting on a 6-year project, they think, okay, they are holier than thou, or they are greater, they are building wealth. But someone who is betting on 6 minutes from now is a trader. We kind of shun them. But I don't think that is how it works. Both are speculating, and it would also be unfair to say that holding on to an asset for 6 years is a sure shot way of building wealth. That's not true. That may not be true either. Okay, so if you were in Japan for the past, let's say, 15-20 years, and you would have held on to their indexes, you would have lost all your money, because the economy was not growing. The index was going down all through this period. Okay, so it's not necessary. It's a generally used phrase that because American economy, because the Indian economy has been going on well in the past, and the past is very small, at least in the Indian case, our markets existed only for maybe 30 years or whatever you want to call it. Okay, they've been there for maybe 100 years in some form or other, but not in a structured way, the way we see it right now. Okay, the US market would have been there for longer, and they've been growing. So we go back to that precedent and say, usually market grows in a matter of 5 years, 6 years, it'll grow. Even if there's a recession, it'll be there for 6 months or 1 year, and then the market would grow. But then, is that always necessary? The answer maybe not. There can be a recession which goes on for 6 years. Possible. Theoretically, it's possible. You don't want it to happen, but it's possible.
Sandeep sir, one thing, I want to ask one question, which I am really looking forward to ask you this question actually. So since you run an investment firm and you are into the market, you the founder of Zerodha, he wrote some tweet some weeks ago that says that though India have 140 crores populations, but India currently have only around 9 crores of Demat account. And in that 9 crores of Demat account, all are not unique. Only around 6 crores Demat accounts are unique. And in that 6 crores, only 3 crores Demat accounts holds more than 10,000 investment.
Correct.
Right. So if you look into this number, most Indian population don't invest.
Correct.
Right. Most Indian population don't put their money in stock market.
That's correct.
Right. So he pointed out saying that people know some people, like, I mean, even the people in tier 2, tier 3 cities get to know about stock market or what is investing is, but they simply don't have money to invest.
Correct.
Right. So what is your perspective? Because you run a stock, you run an investment firm, and at the same time you are in the market, you do research. If you see these numbers, where say if we have only around 3 crores of Indian who have more than 10,000 investment in stocks, then that's around 2 to 3% of Indian populations, right? So if you look at these numbers, what will you say?
Okay, so here, I mean, I just want to make a disclaimer here. I'm speaking for myself here when I answer this question, not for my company, but my personal view. Okay, on this. So so the data presented by Nitin Kamath of Zerodha is obviously correct. Okay,
Yes.
so there are two parts to it. I would want to answer it. One is, as you said, we are an economy which is very skewed from an equality standpoint. Okay, so there are a few people, a very small percentage of people who have considerable wealth, and then there's a large part of the population which can't even think about, getting a job, forget about opening a demat account and invest. Okay, so anything which is any product or service which is in this formal market is obviously catering to that small group of people. Okay, so as you said, these small group of 3 crore people, okay, is the market for all the products which exist in the small space of fintech or stock market. Okay, that is the reality. At the same time, for a firm which exists in this business, okay, the way one could look at it is a small portion of that user base good enough for you to build a sustainable business? That's one way of looking at it. Okay, so yes, there are 3 crore users, but can we have, let's say, 50 lakh paying users and still be a sustainable entity?
Yes.
That is one way to look at it. Okay. And that 50 lakh would grow in its own way over a period of time.
Yes.
As the broader economy grows. Okay. So which is not happening right now. I mean, so it would take time. Okay?
Yes, exactly.
So what's happening right now in the past couple of years is people who could afford it but we're still not participating in the market are now participating. You get what I mean to say?
Yes.
Okay.
Yes.
So people who maybe never thought of opening a demat account, but they still have a few thousand rupees or a lakh in their bank account. Now they're opening a demat account. So that's a great thing. So the participation is increasing, but the base is not increasing. Okay. Because, you really need solid economic growth for more people to come into the formal economy where they would start, their savings would be higher and they would be able to invest more in the markets. So that's a larger, macroeconomic thing, which would have its own slow pace. But one way to look at it is you just think of designing your business in a way that you try to capture a part of that smaller market, and still, if you can be, if you can sustain yourself, that's the business. That's how it is. That's the reality. But it's,
that's a very good way to look at it from a business standpoint, or say from a founder standpoint, because if you are looking at the problem, then we won't be able to do the business. But if you are looking at the positive sense, say if we can sustain a business with 15 lakhs paying customers, then I mean, that's a very good thing.
That's fine. I mean, that gives you a runway for a few years, right? And then you can decide to kind of do other things.
Yeah, wonderful. So Sandeep sir, one thing, when I talk to people, I always want to ask what books they read. And for a person like you who have built a career since a long time, and you have built your life very beautifully, you are running successful businesses, and you have lots of wisdom. By talking to you, I can already see that you have, of course, you do have so much knowledge, but more so you have more wisdom, which can shape every humanity, right? So I want to ask, what books do you read?
Okay, so my answer to that question is, I, like a lot of others, I'm sure, went through a phase of book collection. Okay. So you go to a bookstore like Bookworm, pre-internet era, and then you would want to buy everything. And then obviously you're buying more than what you can read.
Yes.
Okay. So that is, you get to a phase where you're trying to eat more than what you can chew. And so obviously I went through that phase. And so that is, somewhere during that phase, I realized that even the books which I would want to read are not something which are of value in totality. So there could be a book, but the idea of that book could be there in 2 or 3 chapters.
Yes,
essentially.
yes,
Okay,
yes.
so my reading over a period of time has evolved like that. So what I would want is, I do not necessarily read a book from top to bottom. Very few books, if I find the the few messages or the essence of that book relevant, I think there's more to the stories. But then
Mm,
uh, it's something like this. Usually there can be books, I can put them in two or three categories. Okay,
mm,
so there is at a lowest end could be a textbook which has got
mm.
a chapter, and then there are different concepts in each of those chapters.
Yes.
So again, you want to go to a specific chapter, you go to that chapter, learn what
Mm,
that concept is, assuming that that chapter has got no linkage with other
mm,
chapters.
mm,
It's an atomic unit by itself. You
mm,
can do that. Okay. Otherwise, you'll have to read the other chapters which are connected to it. So
mm,
that's one end of the spectrum.
mm,
And then there are other end, where there are these core ideas.
mm.
Okay. So let's take a book by let's say I like Malcolm Gladwell a bit. So let's
Okay.
say his books, which were popular a decade back, things like you know what's what was the book? I'm trying to recollect his book on Blink. Okay, Blink was
Okay.
one of the books which was about decision making which he wrote, and then there were a lot of other books which he wrote later. Okay, but these are authors which are who are great storytellers.
Mm,
So they would catch on to one idea, and then write thousands of words on that idea. But
mm.
then the idea is just one. Okay,
Yes, yes.
so in for authors like that, I make a decision. So do I want to focus on the core idea,
Mm,
or am I also interested in the research and the stories which they share in the book?
mm.
Okay, so a book like Blink would have three parts to it. There's a core idea.
Yes.
Okay, and then there is some research which supports that idea,
Mm,
and then there are these stories which the author adds to it, and
mm.
that's the book. Okay,
Yes.
I'm not talking about a fiction book because I don't read fiction. Okay,
Okay.
so but largely this is the structure of the books that I read.
Mm,
So I take a call. Do I like the author's stories or
mm.
storytelling? Then I'll read the stories along, because the idea is just one. You could
Yes.
just finish the book in half an hour because the core idea is just one. Okay, most
Yes.
of the book. But if I like the stories, then I would spend more time.
Mm,
And if I like the research, then I'll go back to the references which the author provides and go to the research directly rather than reading a small abstract of it in the author's book.
mm.
You get what I mean?
So yeah, so basically, a good book for you necessarily have to have three things. The first is the core message. The second
Yeah,
one is a research that is back the core message,
yeah, yeah,
the
yeah.
maybe the stacks or some numbers,
All
some
that. Yeah,
evidence, and then the
yeah.
third one is the storytelling.
The
How the
storytelling.
story,
Yeah.
yeah, yeah. That's
So most of the books that I read would have these three parts, and whether I read a book fully depends on which part I'm interested in more for
mm,
a given topic. As I said, most of the times it is the core message,
mm,
a few chapters maybe in the book, and then I go to the research which is backing that, and then whether I
mm,
see whether the research has been kind of very selective and
mm,
or exhaustive. So it's not always reading books as such, but I do. So depending on the context, so there are people like Malcolm Gladwell or Robert Greene who are great storytellers, and then there could be others who are great researchers in terms of they pick and choose best
mm,
of the research. And given the way things have evolved now, you have social media, you have individual aggregators of knowledge
mm,
who
mm.
who believe in putting summaries and excerpts together. I enjoy a lot of that too, rather than sticking to just books. So that's how I pick it up. But long story short, I pick up an idea and I try to read about that
Mm,
idea rather than reading books. You get
mm.
what I mean? So,
Yes,
so
yes.
if I want to understand inflation, so I would read different people who have written about inflation, and then that I build my understanding of inflation around it.
Mm, mm.
So, but need not be one book from
Okay.
page 1 to page 100 or page 500 about
Mm.
inflation. That's not how I would go about it.
That's really, really wonderful. I mean, I get to understand how you pick a book or say view or read a book
Correct.
by observing the most three important things.
Yeah.
Yeah. So I mean, one last questions. We have
Sure.
talked for a long time. One thing before I ask this question, we will talk again maybe in the next podcast, or we will try
Sure.
to come out with
Definitely.
more podcasts like this. Because I still have so many questions to ask, so many things to learn from you.
Mm-hmm.
But for now, let's maybe wrap this up with one question.
Sure.
Because now you have reached to a point where in your career and in your life that hey, I have gone through a lot of things in my life, and I have somehow find my happiness or say find my meaning, and I'm
Mm-hmm.
living beautifully, right? Some kind of something like that. So what will be your advice for young people like me who are starting the career or say right after college trying to get a job, or who are in the for the first time, what will be your advice for the young people out there? People who are in college, people who are entering the job market for the first time. Yeah.
Okay. So as much as I hate advising, but all that I can share is my view, and it can be wrong. Okay. So take whatever I say with a pinch of salt, or a bucket full of salt rather. And so what has worked well for me in my context is exploring different areas. Okay. So one is, when you're young, I was reading this book called Range recently. Okay. Yeah. And not able to recollect the name of the author, but you'll find it. It's a popular book. And that the author tries to differentiate between generalists and specialists in that book. And I could relate to a lot which was being talked about there, is because I think your early days of your career, you're really not sure.
Yes.
About what you want, about anything. So it's a great time to explore different areas rather than figure out a specialization right there. Okay. So if you're unhappy with the job, fine, move on. Doesn't matter in the long run. Okay. So, but one of the things which comes to my mind right now is when you're young, the problem is whatever is happening to you at that moment seems to you to be a big problem, but in the long run, that's not the case. Okay. So if you are a 21-year-old and you lose, and you want a job in a specific area and you're not able to get it, you may think, oh shit, my life is ruined because I can't get this job. Okay. But in the long run, that's just a job at the end of the day. Okay. So, but it's very hard to convince a 21-year-old that, the problem which he or she is facing is a small problem and you'll get away with it. Or in the long run, it's not going to matter. So think of it from that perspective. Whatever actions that you have right now or today, is it going to have long-term implications? Chances are, maybe not. Okay. So if you have worked at 5 different functions or 5 different jobs in the initial years of your career, it's absolutely fine. What matters is what you learn at the end of, let's say, 5 or 10 years. And that's the point where you will have a perspective. And you would be able to then figure out, okay, this is what I want to do for the rest of my life. For all you know, after working for 10 years, you may realize, I just want to leave everything and go somewhere else and start a shop, maybe. Fine, that's okay. But, building perspective when you're young is key. And questioning it. I mean, don't really buy into anyone's narrative, including mine. Okay, so question it. So there are biases and we humans are, full of them. So it's always important to question whoever they are. It could be your parents, but your parents also would have some biases. So though you may think their interests are aligned with you, but their ability to process the past may not be correct. So their advice to you may not be correct. Okay, may not be the best. Not because they don't like you, but because that's how much they can think with their experience. So that's why question everything, come to your own conclusions and experience, different kinds of things that you can. Don't get stuck to just one thing. And do take a little bit of time out to enjoy as well, because at the end of the day, life is short. So you can't really spend all your time into a serious pursuit. So you need to have some small time allocated to have fun as well.